Welcome back to QuickBooks Online. In this lesson, we're going to look at how we would go about recording supplies either under the accrual basis or under the cash basis. So let's go ahead and look at that first of all. So this is the cash basis. So who do we pay? Well, we paid the office supply. So I set up a new payee, and it's going to be paid with the MasterCard. And make sure the date's right. So for office supplies, since this is the cash basis, that means that whenever we pay for the office supplies, that's when it's an expense for us. So we're going to add a category called office supplies expense. This is brand new, first time we bought office supplies, and so we're going to add this account. So we're setting this up as an expense. Even though we haven't used up the paper yet, because we're paying for the paper right now, it's an expense. Since we pay for it, it follows the cash because we're demonstrating the cash basis. So we're going to use the office supplies expense. And we bought $100 worth of office supplies, and so we save and close. But what if we do the accrual basis? If we use the accrual basis, then what the accrual basis states is that it's not when we pay for the office supplies, it's not when we pay for the paper, it's when we use the paper. And in the meantime, it's a resource. So we'll set it up, the expense up the same in the beginning. We'll use the payee as ABC office supplies. The first time we did it using cash basis. This time we're going to use the accrual basis. So we're going to call the new account office supplies. So this is a current asset because we just bought a year or less supply of paper, $100 worth. The detail type is other current asset, and then the name is we're going to call it office supplies for that account, so that we'll see how much office supplies we have available for us. Now at the end of the month, we see that we used $20 worth of paper. So we used up $20 worth of paper, so that's going to be our expense. The $100 that we paid for the paper before was going into the assets. It wasn't an expense yet, but we used up some paper, so that's when it becomes an expense. So what we'll do is we'll use a journal entry. And this is going to be at the end of the month. So at the end of the month we say, well, how much paper did we use up? And it turns out we used up $20 worth of paper, like we said earlier. And so since we used it up, that's going to be our office supplies expense. And then what we're going to do is we're going to credit the office supplies, because by crediting the office supplies, it reduces office supplies. So office supplies started out with $100. Now we're taking $20 out by doing a credit, and that's going to reduce our office supplies. So with the accrual basis, instead of looking at the office supplies as an expense when we paid for it, we consider office supplies an expense when we used up the office supplies. In the meantime, the office supplies sits there in the asset account called office supplies. The timing of when the office supplies expense occurs is the difference between the cash basis and the accrual basis. You would not have done both the cash and accrual basis. You would have picked one or the other, however your business was set up.